The new tax regime in India offers simplicity, but at what cost? If you opt for the income tax option under Section 115 BAC, you'll have to say goodbye to several tax rebates available under the old regime. Let's break down what this means for your finances. Under the new tax regime, you'll no longer be able to claim deductions for health insurance policies under Section 80D. This means losing out on up to 50,000 rupees for senior citizens and 25,000 rupees for others. The cumulative deduction of 1.5 lakh rupees under Sections 80C, 80CCC and 80CCD for savings, investments and pension fund premiums is also off the table. Housing loan interest deductions face significant changes too. The 50,000 to 1.50,000 rupee deductions under Sections 80EE and 80EEA, as well as the 2 lakh rupee deduction under Section 24, are no longer available. If you're repaying an education loan, you'll lose the deduction under Section 80E for the interest paid. For those considering electric vehicles, the 150,000 rupee deduction under Section 80 EEB for interest on loans taken for their purchase is also gone. Additionally, the 10,000 rupee deduction on savings account interest under Section 80 TTA and the 50,000 rupee deduction for senior citizens on deposit interest under Section 80 TTB are not applicable in the new regime. However, it's not all bad news. Some rebates are still available under the new tax regime. The Section 87A rebate for resident Indians has been expanded to cover those with taxable income up to 7 lakh rupees, compared to 5 lakh rupees in the old regime. Certain allowances like conveyance, travel, and transfer allowances remain exempt. The standard deduction for salaried persons and pensioners has increased to 75,000 rupees, up from 50,000 rupees in the old regime. It's worth noting that some tax rebates don't require fresh investments and can be claimed in the old regime. These include deductions for health insurance premiums, education loan interest, housing loan interest, and donations to certain organizations. Parents can also claim tuition fees for up to 2 children under Section 80C, a special note for senior citizens. Even without health insurance, you can claim up to 50,000 rupees in tax rebates under Section 80D for medical bills paid through non-cash methods. Your children can also claim these rebates if they pay your medical bills and you don't have health insurance. Choosing between the old and new tax regimes requires careful consideration of your financial situation and investment patterns. While the new regime offers simplicity, it may not be the most beneficial option for everyone. Assess your deductions and exemptions carefully to make the most informed decision for your taxes.